We have begun. Good morning. This is Dennis Wilburn with the Active Trend Traders. Welcome to the How to Make Money Trading Stock shows from Dallas, Texas. We've got Mike Traeger joining us. Hi, Mike.
Good morning. Good morning. How you doing?
And then we also have Michael Bishop from Zurich joining us again this week. And I'm really glad to have both of you guys online. How are you this morning, Michael?
Yeah, hello. I'm great.
And so, of course, I should say, how are you this evening? Because it's like, what, 7 o'clock? 7 o'clock there in Zurich. And so got a lot planned for today. So we'll go ahead and push the go button and away we go. I want to remind everybody that all the materials that we do present are for training purposes only and informational only. Traders should always paper trade any new method prior to the risk of their own personal capital. This week has been kind of a crazy week. I want to remind everybody this coming Wednesday night for the Premium Active Trend Traders, we will be talking about pinpoint entries. I'll be providing some insight into how to use intraday charts even though you're not a day trader. In other words, intraday charts for non-intraday people. Going to have some fun with that. And some of the things that will highlight will definitely help people hone in on proper entries and more specific is it objective or subjective? I always forget. Where you're looking at where it's objective means it's concrete, right? Mike, anybody?
Well, to me, objective means there's something there's a hard, numerical or factual, thing that you're doing or looking at, as opposed to subjective, which is more of an opinion or a feeling.
Oh, okay. And anyway, I could go into a lot of things about opinions and feelings, but I won't right now. Anyway, so yeah, objective is kind of what we want to provide. And so how's it going this week? Well, this week has been filled with gyrations and more or less a tight range. It almost has seemed like the markets themselves went into neutral, and as they wait for the Fed. S&P up slightly for the week. I've seen lots of people asking a question: is a sound bottom in place? NASDAQ, strongest of the indices again, and then is the Russell building a base? And outside influences, the biggest outside influence I see for the week, and I'll ask Mike and Michael for their comments on this, but the strongest influence I see for this week is the Fed meeting and the report out on the 17th. Yes, there is continual global noise, and I've been sitting here wondering, what aren't they saying? And they being the people in the know and a lot of the institutions and all that type of stuff. So Mike and or Michael or Mike, and then I'll go to Michael. Am I fairly accurate on the Fed being the big deal next week?
Yeah, I think so, at least as far as the markets are concerned. I mean, in terms of an overall, macro perspective, I personally don't see what all the fuss is about. A quarter-point interest rate after 0% interest rates for 7 years doesn't really change anything. But there's a real unhealthy focus on it. But you can't deny that there is a focus on it. So I do think it's a market mover, at least for a short-term move.
Okay.
And what they aren't saying, I think, is a really good thing for you to bring up, because what they aren't saying is huge and possibly more important than what they are saying.
Yeah. And so, Michael, what's the U.S. Fed's meeting this week? What's that mean over in the European market?
Well, that everybody is watching the U.S. market. And I wouldn't be surprised if next week we don't see big moves.
Okay.
Just calming down a little bit. And I think that globally there are and and risks that are harder to predict around than this Fed decision.
Okay. So if the Fed decides to not raise rates, what do you think what do you think is gonna happen? Either you guys.
Well, I think you're going to have a pretty, a pretty sharp rally up to, pretty well, at least up to pretty well established, resistance levels, if not beyond. And it may be a temporary rally, before the resumption of a downtrend, but certainly it's going to trigger something to the upside.
Yeah, right on. And if we get if we do get the interest rate, I mean, it should basically an interest rate rise, even if it's only 0.25%, should be fairly cooked into the numbers, I would think. But if we do get the increase, are you expecting this? At least down to
Don't know.
At least down to a level of support, like maybe the last swing low, because that's several points away.
Well, it could happen. You don't know, and again, you also don't know the extent to which the markets are driven by computers these days, and computer algorithms, and what those are. If they're programmed to look at a headline rate increase to trigger sell programs, then yeah, there's going to be a downside. I think it's unknown what the downside is, but I think it's pretty predictable that there will be an upside if there's no rate increase.
Right. So, Michael, did you want to jump in there?
Yeah, I think it's hard. The problem with that is that everybody is. It's not a. If they don't come with a really surprise, then it's kind of priced in.
Okay.
And what could be that just the market needs to find a new balance, that it goes up. Although I wouldn't be surprised that the move is quite surprising. So either they raise rates, but the market goes a little bit up and not down, or the other way around. So
okay.
It's almost casino.
Okay. I think that the other big economy in the world that is so opaque to us in reality that could have a big hammer going through the end of the year or maybe even into next year is, the C word.
Mm-hmm.
Yeah, China. And what they aren't saying about China, I think, is huge. From the reading I do, there's a lot more trouble in China with their economy and their debt situation than you're ever going to know about if you only listen to sort of the mainstream media.
Yeah. And so that's what I was referring to, where continued noise globally, because China's been kind of quiet this week. But what are they not saying, especially about China? So I'm sitting there going, and so I'm scratching my head. Let's move on. So here's where we were last week on one of the indicators that Mike and I watch, which is the percentage of stocks above their 20-day moving average. This is where we were last week. We had just come off the 20, off of a rebound down here on the 5 level, thinking, this is really, this did not lead to it led to a mediocre rise in the index ETFs. However, today, as you see, we're starting to push back down. Again, are we going to be hovering between, the 50 down here to the 5 level until we get some order back into the markets, one order, and secondly is a little bit more pattern-oriented type of trajectories, which right now we're just not getting that. But as you can see, we did make the move up. We made the move back up into the range of the where, this downtrending line, which is telling us, the number of percentage of stocks that are actually above their 20-day moving average. But one of the things that I find even more interesting right now, at least, is moving over to the even longer term charts, which here is the percentage of stocks in the NYSE that are above their 200-day moving average. And this is a weekly chart, not a daily chart. And so last week we had come down to this, basically this, benchmark level, about 26.5, 27. And this week we're getting a little bit of a bounce up. But one of the things I find very interesting is that the bounce up hasn't been like some of the other bounces up. Like, as you can see, this is a really nice heavy weight bounce that happened in October of last year, but it's really, really, really muted at this present time. So I don't know if I'm going to anticipate it continuing to be muted, and maybe we pop up a little bit and then roll back over. If the market does continue to correct, then I would not be surprised to see us do a little bit of a relief rally, as Mike said, back up into perhaps the resistance zone that are close to this year's highs, maybe, or at least the zone up there, and then a rollover. But we'll watch to see the participation rate of the individual stocks that are in the NYSE. So does that sound pretty accurate, Mike?
Yeah, it's fairly accurate, and certainly there are others to keep an eye on when you're looking at these kinds of things. One of the metrics I think is interesting, and which I think was a really good indicator, before the big downturn happened, is the number, and you look at this in any of the papers or the websites on a daily basis, the number of new highs in the market, new 52-week highs versus 52-week lows on any given day. And as the market was, sort of trying to rebound off of that little flash crash we had a couple of weeks ago, and we had a couple of big up days, and I was reading that particular statistic in IBD. I mean, the number of new lows, even on an up day for the indexes, was, several multiples of the number of new highs. And that tells me that, it was a bounce off of the flash crash, but probably a dead cat bounce.
Yep.
And that's exactly what it's proving to be, at least so far.
Yep, so far. So, awesome. So I am going to turn. Now, Michael, I'm going to give you control of the mouse, but if you need me to highlight anything, just let me know. Because when I move my mouse, it takes away from being able to, so if you will test out your mouse to make sure you're working on your slide. Can you see your slide?
Yeah.
You can.
Okay. Okay.
And so now Michael's going to be providing us some thoughts on perhaps it is time to get out of the U.S. market, and there are some other things that may be a greater value. And so, Michael, you have the floor, my friend.
Yeah, thanks. Well, what you from the US, maybe you did not, you are not fully aware that 2015 has been a hard year, because basically only the US was really doing well, and some niche markets, but Europe and basically all asset classes have been quite bad. So 2015 looked at the beginning really promising, that finally Europe gets to speed, and US just continues the rally. As now we are negative basically everywhere. China was a great boom and bust, and Japan, I think it's flat year to date, or depending in which currency you take it, even negative. And what's also bizarre is, if you would have been a contrarian, then everything would be much worse. There you could really just basically lost all your money. I mean, steel stocks or uranium, coal, and also emerging markets, Brazil. I mean, these were markets that corrected, I think, 20, 30, even 40% this year, after they have corrected about 20% last year. So it's really the contrarian view was awful, and we all know that gold and silver was a bad investment once again. And even in Russia, which was last year after this the big crisis with the Ukraine, it looked like it's on the bottom. I mean, it can only go up, but this year it even went farther down a little bit at least. And the safe way as bonds did not work brilliantly either. So, I mean, definitely it has been a very difficult year. As even a technology that looked quite promising for the first 2 quarters. That's also this is ROM is an ETF which covers basically the big technology companies like Apple, IBM, Qualcomm, and some other big players. And SOX is the semiconductors. They looked very promising and until the summer, and are now also definitely negative. So actually, at least what I found so far, the only strategy that worked was putting the money really in the big momentum stocks. And I picked out one quite interesting ETF. That's the MTUM. It just puts, I think, every month the S&P stocks with the most positive performance. And you see at the line below is the S&P, and that's, I think it's a 1 year perspective, 1 year. And you see, so in the last 3 quarters, it was clearly overperforming, and it's one of the few instruments that are, or vehicles that are now in the that brought in some positive returns.
Yeah.
So,
hey, Michael, but even that one looks like from a technical standpoint, it's getting ready to turn back over. I mean, to drop some more.
Yeah.
Okay.
Agree. Yeah. So I mean, the question is quite obvious. Is it now the time to kind of really change the gear and put your money into very different assets? And I took a look at this, and of course I also hear a lot of what other investors and money managers are doing. And I mean, one really beaten down market is the emerging markets as general, or I think you could pick out every single country. Valuations are low, but the problem here is the valuations have been low into, this is a 5 years chart, and they have been low into 15 to 13 to 12. So nothing is really going on there. And into 14, it looked like now it's really picking up. But it was a false rally. The 45 was not taken, and then tested the lows again, then I know an analyst I appreciate very much, and I think in April this year he said now it's really finally time to go into emerging markets, especially on the bigger corporations with reliable dividends. And once again, it was a false alert, and this time it was a really false alert. So if you did not have any trailing stops, then you're whipped out again, and now we're kind of in no man's land. Just to show you the extremes, 2.7 we had, this ETF had a high of 55, and that's a typo. I think it was, and 2.8 it was 20. So you see also how fast this can go down. And I looked a lot of these emerging markets, and my conclusion is that even from a logical point of view, that the long-term perspectives are great. It's very hard to predict. I mean, the Mr. Emerging Markets, Möbius, and his Templeton fund has done not bad, but very bad. I mean, most ETFs have done much better than his fund. And of course, you have a relation to commodity. And on the other side, I think if we finally have then found a button, then we can easily go up again to 50, 54. So that would be a 20-30% rise. Maybe the conclusion I tell you a little bit later, and before that, another chart. Here we go. That's one of the biggest commodity ETFs, and I'm fully aware that you have to take a look at every commodity separately, and you have also this rollover costs that have to be taken into consideration when just seeing this performance on an absolute basis. But nevertheless, you see that it started about summer, autumn last year. It just went down, and there seems to be no, or at least now we are in a stage that you don't find any historical lows.
Hey, Michael, is this a leveraged ETF?
No, it's not.
Okay.
And it doesn't matter if you take an agriculture index, or I mean, oil looks different, but I think at the end even worse. So in 2013, 14, I couldn't answer this if we are now at the end of a bull cycle or not. And now, I mean, you can almost take every definition. And you have to say we really the bull cycle has been over. And I mean, a lot of famous investors got it wrong. I mean, even Warren Buffett. I mean, difference between Warren Buffett and many others, that he sold his energy stocks with loss, but quite before the big crash. And I mean, there are a lot of possible reasons, and at the end, you always know more than at the beginning. But the strong dollar, the global growth weakening, and also new technology. I think that's something that is not mentioned too often. But what I hear is that now some traders who really know what to do and who do not they do not have a particular focus on commodities, that they jump in, or they have jumped into the market just because the volatility is so high, and they can play with volatility and premiums.
I really like the thesis you're presenting, Michael. I do have one or two questions or comments before I have to go. My first question is, are these like weekly or monthly charts that you're showing?
It's a 5 years chart. So I would say one bar is 1 week.
1 week. All right. So these are weekly charts. Timing on these things is awfully difficult, but I think maybe we can help ourselves with timing a little bit by keeping and looking for turning points, by keeping an eye on some of these longer term weekly and monthly charts, and looking for the kinds of reversal candlesticks and the positive divergences that we normally see at turning points when it looks like a trend is getting ready to turn around. And I don't know that we're seeing those divergences yet, but I haven't really looked at it that closely. But that's one thing to keep an eye on. And the other thing, again, from a bigger economic or macro perspective, part of the problem that's happening in the commodity sectors and the commodities countries like Brazil is that we've had this unusual period getting back to the Federal Reserve. I mean, we've had zero interest rates for years and years and years, and it has resulted in a tremendous overcapacity in all of the commodity industries. Countries like China and Brazil, even Canada and the U.S. have just way, because the money was cheap, have built so much capacity in these industries. It's a big part of the equation as to why things are coming down. And until some of that capacity utilization changes, I think we're going to continue to see commodity prices and the markets of commodity countries continue their downtrends. And that'll be reflected in the longer term charts and in the price action, I think.
Yeah. And if the market should really turn around, then the characteristics of this market is that they do it in a strong way. And so I think if you are on the cautious side and wait a little bit until it's really a strong trend, you don't miss too much.
Yeah, well, I have to agree with that. I mean, it's hard to pick a bottom, but it's a little bit easier to pick up a new trend once it's beginning to show itself.
Yeah, a couple of the members who are tuned in today. One of them was saying that on the DBC here for U.S. investors, they do issue K1s, which has to be filed with your income tax. And then David Trujillo indicated that if you pull this up and throw a 16 or 20 week whole moving average on it, it's looking like it is reaching a turnaround point. That's just, for those who like to use the whole, give you a little bit of a jump. And also he's saying that the 8 and 10 week moving averages, use the 8 and 10 week moving averages to tell you when to get out of the trade. So this could be, does this entity have leaps on it? I would
Say it
imagine.
again. Does this
Does
entity?
does this entity have leap options on it? Probably does.
Dennis, I
Uh,
imagine that it would because it's a pretty big ETF for
Yeah,
commodities.
yeah. One of the things you talk about commodities. My oldest son, Dennis Jr., he works in the oil field. He is a merchant marine, uh, uh, chief mate and captain on some ships. He's currently out of the industry, but the company that he used to work for, which is Noble Energy, big drilling company, they have started cold stacking. That's a nautical term, but cold stacking their drilling ships and drilling platforms. And what cold stacking means is they basically shut down the rig totally, with exception of just some auxiliary generators to keep the emergency lighting on. But when they cold stack something, typically that means that they are not expecting to be utilizing that equipment for a good 6 months to over 6 months or longer. So just
Yeah, that's a good piece of information, and it gets back to what I was talking about with the overcapacity in a lot of these commodity industries. I mean, one way to address that is just to shut down production, which is what cold stacking does.
okay. So okay, Michael, you got some more? You got another slide?
yeah, the last one, or basically my conclusion. Can you? Okay. So for now, I'd say, and this is what money managers do at the moment I follow, is it's not a time to jump into anything. I mean, the markets are very unsure, and so better to reduce risk, manage your cash, do some little short-term trades, or even, I mean, would be also an alternative. But I personally don't know anybody who is now playing big risk or big games. And I'd keep in mind, even if we maybe correct another 10-15%, I would not bet that the US bull market is really over. It could be like, I think it was in 1987 when it turned out that the correction was a good point to enter again the trades. And European markets look very attractive. I mean, they have been choppy, and if you compare, I mean, some major, for instance, German corporations that basically produced almost the same products than the US, you see that most of them are just cheaper from valuation basis. And so at the beginning of the year, and that's the DAX is the German index, but the European indices look, a lot of them look like this. So at the beginning of the year, it was kind of the line on the bottom, it's the S&P. So you see the market has beaten the S&P for the whole year. And at the beginning, it was a rally that made a lot of sense on my view. Then it was a little bit maybe exaggerated, and then for the rest of the year, it was overlapped by, or extremely influenced by, binary events. The first was then what happens with Greece. Do they need another money? Do they get kicked out of the euro, etc., etc.? Then it seemed that the Greece crisis was over. Then it turned out that they were too fast, and then I mean, that was basically the whole year. There were binary events. Then China, and what is interesting to see that the market found the button earlier, or the button for me looks a little bit more solid than the US indices. Plus, they are around the starting the January 1st level. But so this would favor the European markets, and I think the European markets are overdue for a nice upwards trend. But I mean, if the US market is really crashing again, or showing a lot of weaknesses, and China shows some unpleasant surprises, then I think, and that's also typically in the last decade for Europe, that the market itself is not strong enough to go its way, despite what's going in other in the US especially. So also I say they look attractive. If I also saying so, I would not jump into the markets now. And for commodities and emerging markets, as we discussed, I think we agree all on this. It seems to be too early, and the markets are not that hated that it's really going up. Because now you hear in the media, gold is once again not going down. You read about oil, you read about emerging markets of Brazil going down. I think a good sign would be if the markets that there is no big reporting on the markets anymore.
So okay, Michael, those are a lot of great points, and I think between the three of us, we all kind of agree that at this point, it's not necessarily the right, the proper time to try to go long in a big way, but it may be time to at least start watching to see, because the question is, as I look over here, that we will answer shortly. Yes, is this a nice consolidation pattern over here, or is this just basically a bearish consolidation before we head lower? Still. Yeah. Because as stocks go up, they take periods of times like this one over here to consolidate before they continue going up. Well, at the same time, we've had a significant sell-off over the last month and a half or so, and now we're pulling back up to do a consolidation. So what are you going to be covering next week, Mike?
Yeah, I was asked to cover or to focus on the topic crash or no crash in the next 3 months.
Okay, cool.
And I think we have here together enough material to give at least an indication.
Awesome. And one thing that I would be interested in also for future times, or maybe just a email that I could send out to everybody, is basically what are the ETFs that are set up for, like the DAX? Does the DAX have ETFs by iShares or somebody like that? And some of the
that's perfectly covered.
And I would really like to know that. So hey, thank you. Yeah.
Mm-hmm. Right.
Okay, let's take a look at as of 9 o'clock this morning, the indices for the week are up a little bit from where they were last week. Here's where we were last week, and we're up a little bit. The Nasdaq itself, which I've been saying is the strongest of the three tracking indices that I use, is a little bit stronger. So it has gotten up to about 0.9% which is about up 1% for the year so far. But while we've been sitting here chatting, the markets have basically gone negative again, and they're dropping a little bit. They're not falling out of the sky, and I don't really anticipate them to fall out of the sky simply because the I don't anticipate the markets falling out of the sky until we find out what's going to happen with the Fed next week. So let's take a look at some charts real quick. And as I said, there's not a lot. Make sure I got the right one. Okay, here's the S&P. As you can see, the S&P, and I want to hone in everybody's attention primarily over here to the weekly chart. The weekly chart shows some interesting situations. One, the TSI is getting down around the reversal level where it tends to want to reverse up. However, it can do some testing back down in here. And pay attention, draw a resistance line right here at the top of this hammer that happened 3 weeks ago. And right now, that hammer, which is a candlestick reversal signal, is in fact still in effect and will remain in effect until the low is broken. And so this is a huge range for the S&P to be working in. On a weekly basis, we get a little bit of a pickup in the momentum, showing that yes, we are trying to go up. However, as long as the true strength indicator does remain below the zero line, which is the red line there, that's indicative that longer term, or at least on a daily basis, that the market is still considered in a downturn. And Judy just typed in that EWG is a German ETF. That's excellent. EWG.
Say it again. EW.
Yeah,
exactly.
EWG. Awesome.
And you can even have one that is currency hedged for whole Europe. I think it's HEDJ.
HEDJ?
Yeah.
Okay. So here is the NASDAQ. I will get, isn't it kind of interesting with the NASDAQ? The NASDAQ over the last 2 weeks after coming, springboarding up off the top, is basically living in the magic fib box, which is the 61.8 to the 38.2 reversal levels. And right now, it's just living there. It is not going anywhere. Of note with the index, with the NASDAQ, it came right up again this morning up to the 20-day moving average. And so we're starting to get this little squeeze going on with the 8-day and the 20-day, which will resolve one way or the other. Again, it may very well be wait until Thursday of next week. And I would anticipate, like I said, some interesting movement on both Thursday and Friday of next week. One of the things I found very interesting is I'm trying to get ready to put on the position for the long IWM leaps that we're collecting premium on each week. You go to the your option chain, and next week in every entity that has options, its volatility, which is also a measurement of uncertainty in the market, for next week, it's up 10 to 15 to 20% above just regular implied volatility, and so it's given us some really nice premium to be able to sell this week. That will expire next Friday, but it will be a wet and rocky ride. On a weekly basis, if we close back down below or close to the 42.85 level, we would have more or less a shooting star type of pattern in effect on the weekly basis, on the weekly chart, and then on the Russell, The Russell is even more pronounced, at least where we had this high here up, and if you draw we'll just draw on a real quick trend line here for where that is, and we'll see on the daily charts where that coincides. Just below, this is Friday 2 weeks ago, just below that low is a level of resistance on the Russell. And as you can see, Russell's doing a similar type thing. Went up to that level yesterday, turned back, fell back, or on Wednesday fell back, and now is just playing a little game as it kind of goes sideways. And I expect this sideways action to, unless something devastating happens over the weekend, I expect it to hold through all the way until the Fed meeting next Thursday. David asked a question, do you have further information on the true strength indicator? Is this specific to Thinkorswim, the Thinkorswim charts? David, you can, several other charting programs do offer TSI. They may have less variables that you can work with, but the TSI that I like to use is the 883 exponential, and it's based off of the open, high, low, close divided by 4 to give me the average average for the day or the week or whatever the time period. And I find it it works similarly to stochastics, but it also measures some of the internal strength. And what I like about it is that it's been exceptional when it shows, it's been very good at showing divergences long term, and that's part of the what Mike Traeger was talking about. So we talked about the Russell. Cool. You see if I have anything. WisdomTree has currency hedged ETFs. Joe says WisdomTree has currency hedged ETFs. David, when we're talking about oil, Saudis are trying to put the shell companies out of business. Not Dutch Shell, but the Shell, SHALE, and then pick up the pieces at fireside prices. Yeah, we'll see about that, because what's interesting is so far the shell companies have been able to come up with some new what do you call it, efficiencies that have been enabling them to keep pumping while the even though the prices of oil are going down. Here's where we're sitting this week. We dropped a little bit this week, but still well, above the S&P. And then for the active trend traders, what we like to do is basically we're based on 5 pillars: what to trade, quality, IBD growth stocks, and or index ETFs. The last 6 weeks I've been focused primarily on index ETFs because of the flakiness in the market. There have not been a lot of good, sound, predictable patterns, and so I've just been focusing on basically this strategy here, the wealth and building income, utilizing the active trend trading system to trigger the trades off of that. Here's the same one of the trades we showed you last week and how this has been going. I had sold the IWM 430 long on 430. I sold the long January 16th. That was the leap at the time. 123 calls for $7.60. Over that time frame, I've been collecting about $27.52 per week. I've got 18 more weeks to go until expiration to continue to sell premium against it. And I'm averaging a return each week of about 3.6%. That is inclusive of the losses here. And so right now I've had to adjust my target from 100% return on this trade to a 50% return going on to the third Friday in January, and we're generating approximately $114 per week. And this kind of trade, which I'm really enjoying doing, is scalable. In other words, this is against one contract, as you can see. And I'm doing it for demonstration purposes only in my live account. And so this week's picks.
Just one question
yes, sir.
on the option program. Do you select the calls mechanically, or do you just, or do you think about it every week? What to do?
I select the calls that I'm going to sell, typically on either Thursday or Friday of each week, and I take into consideration what the technicals are telling me, and then what I try to do is sell something that either is, slightly out of the money, or if it looks like like in this case I'm selling calls. If it looks like technically the call, if the chart is going to go down, I will sell an at to a slightly in the money trade, and then capture this. On this particular trade, what I need to be earning each week is about, I think I need to earn about 19 to 20 cents on it. That will pay for my underlying position. And so anything above that amount is basically pays for the underlying position, which could expire worthless, plus generates income. So the answer is, I look at the charts, Mike. So I guess it's not mechanical. So this week, strategy 1, no open trades for strategy 1 or strategy 2. We had a combined. We lost some on the call, but made some on the put. So we had a $270 gain on the strategy 3. And right now we're waiting for the signal to enter into the early warning alerts. So if you're tuning in, you can go to this website here, or if you're watching via the YouTube channel, and get an introductory offer that will be as good as you want to become a premium member or an early warning alert member. And then lastly, Michael, I just want to remind everybody this is 9/11, and for the folks in New York and around the world, 9/11, 2000, what was it? 2001 was a day that has changed the world as we know it forever. So never forget. So that's all I've got for this week. So Michael, you got any final comments? We're going to look at a couple of charts.
It's not a final comment, but maybe you need a good time to look into this. Airline stocks are doing extremely well over the last couple of weeks. So ALK or DAL,
okay,
I can take a look, and I'm very interested in your thoughts on this.
Okay. Yeah, I was looking at ALK and actually see how it's doing today. This Alaska Air, clearly it is. It too suffered as everything else did with the flash crash of a couple of weeks ago. And right now, the way I'm seeing this, Michael, is that it is right at a level of resistance. Mm. And so the question is, it tried to break out from this high, but then failed. And so are we going to get a pullback here to the moving averages, or maybe back to the 50 and then a bounce up? And if it did get back that far, it would still give us a nice little trade from, we'll say 78 up to 82. That's $4 on a stock that size, is what, about 5% or so? And so but as long as the oil, as David's talking about, the lower, if oil goes lower, airlines will not go down. And so this is one of them. I've been watching this. It would have been an ideal place to buy it off the 50 here, but right there we were all kind of shaken up by what had happened here. And so I am keeping my eye on that one. And you mentioned I think Delta?
Yeah, it's DAL.
Okay, not ADL? There we go.
Yeah.
Yeah, Delta's putting in a very similar type pattern. As you can see, one of the things that I find interesting is it's continued to push up a little higher. We are not getting a significant amount of higher buying volume. So that concerns me a little bit, but we did get above average volume here where it popped back up. And so so for DAL and Alaska Air, it's looking like, if I were going to buy, I would be looking for my bounces off of the moving averages, or for at least the moving averages to catch up with it. And another one that you didn't mention, but is doing quite well, is JetBlue. One thing that's interesting about JetBlue, if I was going to be looking at an airline stock, I like JetBlue best because it has, in fact, had a little bit better volume profile and has actually broken out and held the breakout here from this wild cup that it put in here. Does that work?
Yeah, great. Yeah.
Okay. So Tracy wants to know about PAYC. Okay, Tracy, I have been holding on this one to offer, to issue any type of an alert on it because it is just so choppy in here. And so what did it do this week? We basically, last Friday, it was sitting right on the 50-day moving average, jumped up, but now all of a sudden ran up. And where did it run up to? Let's grab a trend line. Oops. Where did it go up to? Put in there. It basically got up to the trend line, but now it's got a new trend line. So it needs to break off of that. We've got good support at the, somewhere between 36, 40, strong support at 37. And so it's just basically trying to figure out what way it's going to go. Again, its volume profile looks kind of wimpy, and so that's the only thing that it is pulling back. So a wimpy profile on the volume is good, and we'll know as soon as it starts to break up back up. So what we may have going on here is the formation of a cup, and this may be the low point on the cup. And so if that kind of continues on, we'd be looking for a breakout up here. But if we do get some traction back up to the upside, and it may be just breaking through this line, that would be an interesting place to perhaps do an early entry as it breaks back up above that line. Okay, Tesla. Excuse me. Tesla is a stock that I want to be long in, and I am watching it like a hawk to see what we are going to get. I would like to pick up Tesla at approximately somewhere between 240 and down here at this lower level at about 232, somewhere in that range. I'll be putting together a spreadsheet on a Tesla trade I'm currently doing where I bought the 2017 Leap, and so I'll be sharing that with everybody, Tracy, either this weekend or first part of next week. But right now it is just doing some really nice consolidation. It's got an upside target. Oppenheimer came out with an upside target of I think about 340. Morgan Stanley came out with an upside target of about 465, and so in reality it has regained everything it lost from the flash crash and now is flirting on moving back above the 50-day moving average, and so and it is back up above both its 200-day and 100-day moving average. So will volume start kicking in? We shall see. Because and the other thing I like about Tesla is that on a weekly chart, Yeah, on a daily, well, excuse me, on an intraday hourly chart, it sets up really, really great patterns. It typically moves about $7 to $10 per day. So so one can set up some very short-term trades to take advantage of selling option premium against it. And so that works well. I think you'll be surprised, Tracy, when you see the spreadsheet that I put together on this. What else we got? ANET. ANT is down in a down, excuse me just a second, is clearly in a downtrend and selling off dramatically. If anything, I would put ANET onto my short list. And of course, you're going to need to wait until, what's most likely to do right now is we're most likely to get a nice little relief rally back up into the moving averages and or this level of support here about 70 and then a rollover. If it had a big drop because of a lawsuit with Cisco, what would be the long-term aspect? Right now, Evelyn, I would, clearly we've got, if you're just going to define the technical spots on this chart, you've got this strong support from last year's, or actually earlier this year's reversal pivot. And so it may test back down in that area. This is a significant sell-off this week, as we can see going down. And but since this is more or less news driven, unless some of the insiders know that maybe Cisco has a good case against them, that's what I would be looking at. I would not necessarily, because there is a something going on here, I wouldn't necessarily wouldn't want to say I wouldn't be a buy and holder on this stock right now. I would, it may offer some short-term trades, but from a technical side, it's looking ugly. You might draw a line in there and put an alert about midway up this candle. It may rally back up to that and roll back over. And I would anticipate, do you sell if you have holdings? That's a great question, and at this particular point, you may very well, and this isn't advice, but if I was long this stock and was sitting on a loss, I would do one of two things. I would go ahead and sell it now, and that way it's out of mind. It's done. You don't have to suffer the psychological hammers of holding onto the stock. Or I would basically put a stop clearly below this low here. And if I climb back above this level, halfway mark of this candle, I would put the stop just slightly below that. Okay, not a loss, just less profit. So, and the other thing you can do is take a little bit off the table. So, Michael, I'm going to do one. Michael, you got any other stocks you want to look at?
No, thanks.
Yeah, I've got one more that we're going to take a look at. Mobley. Yeah, that's one thing that folks oftentimes forget about is if you've got, let's say, 100 shares or 200 shares, it's okay to sell half, especially if you are profitable. It may not be as good a profit as you would like, but at least you're reducing your risk by taking some of your profits, or even taking half of your loss. So that is always an option. Mobley. Hey, Mobley has gotten back down to some longer term support. It looks like it's got some. It's getting close to the support at 40. You got down to 41.08. Right now, it looks like it's trying to put in a hammer for the day. which when, you can see that buyers are coming into this, close to this support down here. But right now, Mobley is in a downtrend, and I would be looking to trade this on any rally back up to, let's say, the 20-day line, or hopefully it will get past the 8-day because the 8 keeps falling. But this whole area here, who wrote this? Joe, this whole gap down area here, that is a level of resistance. And so it may work its way halfway up in that resistance. And that's where I would at least set my initial line of demarcation, that if it got above that, slightly started to stall out, and hits the 200-day moving average, that would be a good trigger to trigger a downside trade. So, does that help, Joe? Okay. Well, Michael, hey, have a great weekend. It hasn't become winter yet in Switzerland, right?
No. It's late summer, autumn.
Ah, okay. So the leaves
the
are
night, but still 20 or what's about 80 degrees. So
okay.
In the afternoon. Yeah.
Well, my son told me, my son's been living in South Korea, and they go by centigrade there also, and they said that it was like, he said yesterday it was like 41 degrees centigrade here at our home, and it was like 107 degrees, so it's real hot. So, okay, folks, I'm going to call it a day. Michael, thank you very much. I'll get the recording out probably a little bit later today. Thanks for all joining. Have a great weekend. And Michael, just a really good quick comment here is Michael's view, European view is greatly appreciated. Thank you very much. Awesome.
Looking forward for next week.
Okay, thanks, Michael. See you, buddy.
Bye.